The financial markets never sleep, and neither do we. This week, we're dissecting the sizzling hot topics you need to know about from January 27th to February 2nd, 2025. Get ready to cut through the noise and understand what's really moving the markets. Let's get into it. Q4 2024 earnings season, under the microscope. Sector-specific focus. Technology, big tech, and semiconductors. Beyond just overall tech earnings, the market will be dissecting specific segments. Are cloud computing growth rates still robust, waiting to show tangible revenue impacts? Are valuations in tech still justified given interest rate environments? How are semiconductor companies navigating supply chain dynamics and demand fluctuations, especially in areas like AI chips versus consumer electronics? Keep an eye on companies like Apple, Microsoft, Amazon, Google, Alphabet, Meta, Nvidia, TSMC, Samsung. Specific questions. Are AI investments starting to show tangible revenue impacts? Are valuations in tech still justified given interest rate environments? Energy, traditional versus renewables. Oil prices will heavily influence energy sector performance. Earnings calls will be scrutinized for capital expenditure plans, production forecasts, and commentary on demand outlook. Renewable energy companies will be under pressure to show profitability and navigate policy changes and competition. Specific questions. How are geopolitical events impacting energy supply and prices? Are renewable energy projects meeting timelines and return expectations? Consumer discretionary, retail, travel, leisure. Consumer spending will be a key indicator of economic health. Retail earnings will reveal insights into consumer confidence and spending patterns, potentially broken down by income levels. Travel and leisure companies will be watched for booking trends and the impact of inflation on travel budgets. Specific questions. Is consumer spending holding up despite inflation? Are there shifts in consumer preferences, for example, experiences versus goods? Are retailers managing inventory effectively? Financials, banks, insurance, asset managers. Interest rate movements directly impact financials. Bank earnings will show net interest margins, loan growth, and credit quality. Insurance companies will be affected by claims and investment returns. Asset managers will see performance linked to market volatility and asset flows. Specific questions. Are banks benefiting from higher interest rates? Is there rising loan delinquency? How are asset managers performing in different market conditions? Healthcare and pharmaceuticals. These sectors are often considered more defensive but are still impacted by economic cycles and policy changes. Pharmaceutical earnings will focus on drug pipelines, patent expirations, and pricing pressures. Healthcare providers will be watched for patient volumes and cost management. Specific questions. Are there significant drug approvals or clinical trial results impacting pharmaceutical companies? How is healthcare spending trending in the face of economic uncertainty? Key metrics beyond EPS. Investors will look beyond just earnings per share. Revenue growth, profit margins, cash flow, and forward guidance will be crucial. Companies that beat on earnings but offer weak guidance might be penalized. Earnings call themes. Listen for recurring themes across earnings calls: supply chain resilience, inflation impact, labor costs, pricing power, demand outlook for 2025, capital expenditure plans, and any mention of recession risks or growth opportunities. Central bank policy and interest rates, the tightrope walk. Federal Reserve U.S. Fed. By early 2025, the market will be intensely focused on the Fed's next moves. Will they be continuing to raise rates, pausing, or even considering rate cuts? Inflation data leading up to this period will be critical. The Fed's communication minutes, speeches will be heavily analyzed for clues. Specific questions: is inflation showing sustained signs of cooling? Is the labor market showing signs of weakening? Is the Fed concerned about recession risks outweighing inflation risks? European Central Bank (ECB). The ECB's policy will be influenced by the Eurozone's economic situation, which might differ from the US. Energy prices, the war in Ukraine, and regional inflation dynamics will be key factors. Specific questions: is the Eurozone facing a recession? How is the ECB balancing inflation concerns with growth risks in Europe? Bank of England BOE. The UK's economic outlook will be closely watched, particularly given inflation and cost of living pressures. The BOE's stance on interest rates and its assessment of the UK economy will be market-moving. Specific questions: is the UK economy in recession or stagflation? How aggressively will the BOE need to combat inflation? Bank of Japan BOJ. The BOJ's ultra-loose monetary policy has been an outlier. Any hints of a shift in BOJ policy, even subtle ones, could have significant global market implications. Specific questions: is Japan finally seeing sustained inflation? Is the BOJ considering adjusting its yield curve control or negative interest rate policy? Currency markets. Central bank policy differentials will drive currency movements. Stronger hawkish signals from one central bank compared to others can lead to currency appreciation. This will impact companies with international operations and commodity prices. Key economic data releases, guiding market sentiment. Inflation data: CPI, PPI, PCE. These reports will be paramount. Are inflation readings continuing to moderate? Is core inflation excluding food and energy also trending down? Unexpectedly high inflation readings could trigger fears of more aggressive central bank tightening. GDP growth figures. Q4 2022 for GDP data or advanced estimates will provide a snapshot of economic growth in major economies. Slower than expected growth could raise recession concerns. Employment data: non-farm payrolls, unemployment rate. The strength of the labor market is a key indicator for central banks. A surprisingly strong jobs report could suggest continued inflationary pressures. A weakening labor market could signal economic slowdown. Consumer confidence and sentiment surveys. These indicators provide insights into consumer spending intentions. Falling consumer confidence could foreshadow weaker economic activity. Purchasing Managers Indices PM is for manufacturing and services sectors. Give a timely read on business activity. Ratings below 50 indicate contraction. Data interpretation and market reaction. The market's reaction to data releases will depend on expectations. Good news is bad news scenarios might emerge if strong economic data is interpreted as justifying more aggressive central bank tightening. Conversely, weak data might be seen as bad news as good news if it suggests central banks might become less hawkish. Geopolitical developments, wildcard risks. Ukraine war. The ongoing conflict and its impact on energy markets, supply chains, and global stability will remain a concern. Escalation or de-escalation scenarios could significantly impact markets. Taiwan and US-China relations. Tensions in the Taiwan Strait and broader US-China relations will continue to be monitored. Any increased military activity or trade disputes could rattle markets. Middle East instability. Regional conflicts or political instability in the Middle East can impact oil prices and investor sentiment. Global trade tensions. Resurfacing trade disputes or protectionist policies could disrupt global trade flows and impact specific sectors. Political events. Major elections or political shifts in key countries could introduce uncertainty and market volatility. Impact on markets. Geopolitical risks can trigger flight to safety flows into government bonds, gold, and the US dollar. Specific sectors, energy, defense, commodities might be directly impacted. Technological innovations and sector trends, long-term drivers. Artificial intelligence AI, generative AI hype versus real applications. The market will be watching for tangible applications and monetization of generative AI technologies. Earnings reports and industry conferences might provide updates on AI adoption and investment. Specific questions. Are companies demonstrating real ROI from AI investments? Are there emerging ethical or regulatory concerns about AI? Electric vehicles and battery technology. EV adoption rates, battery technology advancements, and the development of charging infrastructure will remain hot topics. Competition in the EV space is intensifying. Specific questions. Are EV sales growth rates sustainable, or battery costs continuing to decline? How are traditional automakers adapting to the EV transition? Renewable energy transition and climate tech. Investments in renewable energy, energy storage, carbon capture, and other climate technologies will continue to attract attention. Policy support and regulatory frameworks will be key drivers. Specific questions. Are renewable energy projects becoming more profitable and scalable? Are there policy tailwinds or headwinds for climate tech? Biotechnology and healthcare innovation. Breakthroughs in areas like gene editing, mRNA technology, and personalized medicine will continue to generate interest in the biotech and pharmaceutical sectors. Metaverse and Web3 hype cycle or long-term potential. The market will be assessing the progress or lack thereof in metaverse development and Web3 technologies. Are there signs of wider adoption beyond niche communities? Investment themes. These technological trends will drive long-term investment themes. ESG, environmental, social, governance investing will likely remain a significant factor, with a focus on sustainability and responsible investing. Thanks so much for watching. Don't forget to subscribe for more Decoder the Markets videos. See you in the next one.